Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience of SmithWeekly, including Cindy W., Jack T., and Brent S. On the program today, we've got a new guest joining us for the first time. Mr. Mark English is on the podcast. Mark is the managing director of Auric Mining, a Western Australia-focused gold producer and project developer with conventional open pit operations in the Kalgoorlie and Norseman region, including the Jeffreys Find Mine, the Munda Mine that just started mining operations, the Lindsay's project, and the Burbanks processing facility. The company also has a number of exploration projects nearby that have discovery potential. Auric Mining is listed on the Australian Securities Exchange under the symbol AWJ. Mr. English, it's good to have you on the program. Welcome.
Thank you, Andrew. It's a pleasure.
Mark, well, you are new to the podcast, and as such, I'd like to have you start off here by giving us your background and experience in the junior natural resource sector.
Thanks, Andrew. I've been in Western Australia the majority of my life. I'm a chartered accountant by profession. Western Australia is the resource house of Australia. So throughout my entire corporate experience, I've been involved in mining companies, exploration, doing corporate work, getting involved in prospectuses, capital raising, buying and selling projects, due diligence, that sort of work. And then we decided to establish Auric in 2019, and that is now my sole focus.
Certainly agreed. Western Australia is endowed quite well in the natural resource sector, and lots of wealth being generated there for both the state and also for Australia, and of course, folks around the world who consume those materials. I have to ask you, you're a new guest, and it's always good to get different views on the market. How do you look at the gold market today, Mark, as far as, junior producer in the market like Auric, investor sentiment out there, as well as, if you don't mind, how you see the gold price behaving going forward, given the conditions out there?
I'll chat about the last question first, the gold price. So we see the gold price very bullish. We see the gold price remaining particularly strong, both in US dollar terms and AUD terms. I think we all know about the problems in the world. There's both the economic problems, the debt load in the world, plus there's the problems in Ukraine, Israel, and recently the problems between India and Pakistan. You really wouldn't want that region of India and Pakistan to continue their skirmish, because that would really be catastrophic. I think the other thing that's going to move the dollar price in AUD terms is, of course, Australia's got a very high interest rate at the moment. They're now talking about 3-4 interest rate cuts in Australia this year. When they eventuate, I see the AUD pair with the US dollar weakening. So that's going to have a further uptick in the gold price. The gold price today, Andrew, is amazing. In AUD terms, it's about $5,200 an ounce. When we established Auric in 2019, 2020, you were talking in AUD around 2,600. So of course it's doubled, right? So that is just a huge uplift, and it's a beautiful place to be. From a small gold producer, which we are, we produced out of the Jeffreys Find Mine, we'll produce around 30,000 ounces of gold. So again, $120 to $150 million worth of revenue. So we're not big. The costs around 80 to 90 million. So you're going to make a free cash flow out of that project of somewhere between 30 and $40 million. Because we're a small cap at that stage, we did a joint venture with that project. We did a joint venture with a company called BML. They provide the working capital, they provide the plant and equipment, the men, they fund it. And all Auric does is split 50-50 of that free surplus cash flow. So for our perspective, In 2023, we got a check in round dollar terms of $5 million being our share. 2024 and 25 to date, we've got another 8.1, so it takes us up to 13. There's more cash to come. We're going to mill another 60,000 tonnes of ore starting late June, early July. We expect to get another 3 to 4 million out of that. So Auric will generate somewhere between 16 and 18 million free cash out of Jeffreys Find on a zero risk basis over the last 2 to 3 years. Just stepping back a step, our total cash cost to buy Jeffreys Find and to get Jeffreys Find into operations is 1.5 million Australian. So we are going to get a tenfold return on Jeffreys Find, which is an outstanding result for a small Aussie company, and a lot of that is purely based upon the gold price.
That's very good information. Interesting comments, of course, on the gold market there and where you see this going. And certainly Australia has been a pretty hot spot for mining. And also, I would say, certainly compared to our friends in Canada, that the sentiment in Australia is certainly much better. The market's behaved quite well there. And certainly there's been more success coming out of ASX listed companies than there has been in Canada for a number of reasons, which we'll go into maybe on a separate podcast when you have some spare time. With respect to the cost profile, maybe you can just give us a little bit of a flavor as a small producer, just on a cost profile basis, call it all-in sustaining cost basis. Where do you guys see this landing for the year as far as the company goes based on your expected production out of Jeffreys Find, but then also ramp up at Munda? Just talk a little bit about roughly, I know you can't give exact money here, but just what you would expect on an all-in sustaining basis across company operations.
Two different profiles, really, Andrew. Jeffreys Find, as I said, we're not the miner operator. And the other thing about Jeffreys Find is that I need to emphasize to your listeners is we are trucking it a long way. Okay, so we're trucking that dirt around 210 kilometres each way to the mill. So that trucking cost is a big piece. Munda is in a far easier location, far closer to the mills. So Jeffreys Find to Kalgoorlie, for your listeners, is around 230 k's. Munda to Kalgoorlie is around 100. So of course, that saving in distance is a huge cost reduction in trucking. The mill cost, because at this point in time in Auric's evolution, we don't own our own mill. So we're toll treating our mill, which basically means we're renting a slot in mills. You deliver your ore to that mill, they clean out the mill, they close it down, they get it to a stage where you then take control of that mill for the next 3, 4, 5, 6, 7 weeks, whatever it is, and only your dirt goes through that mill and only your gold gets pushed out from that mill. So for Munda, our cost profile, we're working in an AUD term, all-in sustaining costs of somewhere between 2,750 an ounce and about 3,250 an ounce. If I take your listeners back to an ASX announcement that we did on the 10th of December, it's got a bit more clarity and a bit more meat on the bone about costing. And in that, we expected our costs to run at 2,935 an ounce. So, prices go up. Not everything always goes perfect according to plan on the Excel spreadsheet. There's always weather events. There's always problems. There's always issues that slow you down. And no matter how much you budget for those, reality is normally a lot tougher than your budget. So that's why I said somewhere between 2,750 and 3,250 Aussie gold price at the moment, 5,250. So there's still a good lump of $2,000 an ounce margin in that. Going back to Munda, if I can, we are doing Munda on a very conservative basis. We've never mined Munda before. So we are doing what's called a starter pit, a trial pit, our first blush. So we're expecting to pull out around 125,000 tonnes of dirt. We expect it to come out between 1.6 and 1.8 grams per tonne. We're anticipating to produce around 6,100 ounces of gold. Okay, so if you look at the number, so I just talked about a $2,000 margin on that. So you make a $2,000 margin on 6,000 ounces. We expect to generate, say, $12 million worth of profit out of Munda between today and the 31st of December.
That gives us a good indication here of the mix of operations, and obviously still for you guys to truck that kind of distance back on Jeffrey's Find, obviously the margins there and you guys are going after that goes to show you certainly that there's good incentive to continue to do these operations, and just the mix of operations and where you're starting to locate more of the operations base now that Jeffrey's Find is winding down and Munda is opening up, of course, among other projects we'll talk about here in a moment. I want to just go back just a little bit here, and we've started in on some of the projects, but maybe let's step back and have you just cover briefly background of the company, what the overall strategy is for the company going forward, as well as, Mark, why you took the post as managing director.
Okay, so how it came about is it's quite a beautiful story that John Utley, the technical director, and I live across the road from each other in a suburb north of Perth. John's a gold geologist. John's worked all around the world. John's last major big gig was up there on the Torquoy gold mine up there in Nova Scotia. He worked on that project for 12 to 14 years. That was a hugely successful project. John had some family issues and he had to step back from the workforce for a period of time. We were having a chat, those quintessential Friday afternoon chats on your deck in Perth where it's beautiful sun, nice sunny day. And we decided that we'd put together a gold company. I'm a finance guy, John's a technical guy. So we did that. We gave John the brief that we only wanted to look at gold projects. John's expertise is principally in gold. So we decided that we gave John a blank canvas and said, go and look at gold projects, but only in 2 jurisdictions, either Australia or Canada. We weren't prepared to take any of the jurisdictional risk other than being in those 2 countries. So John looked at projects principally in Australia. He did look at one in Canada that we passed on. And we looked at projects in Queensland, Victoria, and in WA. WA is our home, WA is our base, we know WA. So a company called Austrella, their ASX ticker is ESR, they'd put out an announcement on the ASX that they wanted to sell one of their projects called the Munda Gold Project, which is our flagship project. That was in late 2020, mid-2020. We transacted on that project in September 2020. We bought that project off Australia at that time. Around similar time, Mincor, which was listed on the ASX under the code MCR, Mincor were focusing on nickel, and they were building the Cassini nickel mine, which is about 100 k's south of Munda. And they had the Jeffrey's Find project. And the Jeffrey's Find project is a bit more remote, bit further away from everything else, and it was purely a gold project. So Mincor had announced also on the ASX that they wanted to sell the Jeffrey's Find project. So we raised enough money off family, friends, seed capital, startup equity capital, whatever you want to call it, and we bought both those projects. We bought Munda off Australia and Jeffrey's Find off Mincor. So then to really get into these projects and to get them to the next stage, you need equity. So we did a prospectus in late 2020. We raised around $7.2 million Australian, and we listed on the ASX in February 2021. So we've only been on the ASX for 4 years, so we're still a pretty new kid on the block as far as that goes. But we take a lot of privilege, we take a lot of confidence that we are most probably the quickest small cap company on the ASX to go from exploration to actually gold mining and production. And we think that's a big feather in our cap. We think that's a big accolade for the company, that we have been able to achieve that and to be producing gold, creating revenue, making profits within 4 years of our IPO.
Yes, a great achievement actually to be able to go from that point, make those acquisitions, get into production, and realize cash flow. Cash flow in this market, very important. And certainly companies that have cash flow are much more rewarded than the ones who don't. Good information there. Just on capital structure, I want to have you just cover off a few things here, and then we'll talk about some key staff in a moment. But cover off for us where we are on shares on issue at this point, the current cash on hand, as well as the major shareholders, including yourself and management.
Cash on hand as we speak today is around 5.5 million in the bank. We did our quarterly report at the 31st of March. We were at 7.5 at that stage. So we've burnt about $2 million between 31st of March and today. We paid $450,000 to buy the loaded dog tenements. And there was a pretty big GST bill of $500,000. GST is a timing issue, so a goods and services tax issue, and our payment for the revenue that we got from the Jeffreys Fine Gold was around $500,000. So at the end of the day, our burn rate in this 6-week period has been around near $1 million in OPEX and capital development. Munda is taking a fair bit of cash out of the system as you ramp it up, but our burn rate's not too bad. Our management OPEX rate is really around $200,000 a month. Our total OPEX cost is about $2.4 million a year. Our capital structure is we've got 149 million shares on issue. Our current share price is around 24-25 cents, so our market cap is around $45 million. Our largest shareholder, we have 2 substantial shareholders, of which I am one. Our largest shareholder is a elderly guy out of Melbourne. He's in his mid-70s. He owns about 12% of the company. It's held through his company, FF Ockram, which is his surname spelt backwards. So his name's Jeffrey Markoff. Jeffrey Markoff's very supportive. He has acquired his entire interest in Auric by buying shares on market. He did not come in any placements or any capital raisings. I met with Jeffrey first time in 2023. We developed a relationship throughout 23-24. He came into the market most probably about April, May 2024. He has, as I said, built his equity stake up to just below 12%. We've taken Jeffrey and his financial advisor stockbroker on a 3-day tour of our projects last month. He spent 3 days with us in Kalgoorlie, and we went down and visited Jeffreys Find, Munda, our mine camp, plant and equipment. We took him up and showed him the Burbanks mill site that we have got under contract to buy, and we took him up to Lindsay's to show him that contract that we have under contract to buy. So we had a great 3 days with Jeffrey and his financial advisor. He was very impressed with what we've done and what we are achieving. The directors collectively own about 16% of Auric. I'm about 5.2, 5.3%, and John Utley and Stephen Morris are both in the high 4s. So collectively between the 3 of us, we own the right mix, in my opinion. I wouldn't like to invest in a company where the directors own less than 10%, and I wouldn't like to invest in a company where the directors own more than 25%. If you get outside those 2 metrics, I think it's not beneficial for your shareholders. So I think we're right in the sweet spot as to where the directors' equity should be in Auric.
Mark, thank you for that. And yeah, very good to hear on the cap structure, very early days there. And of course, your guys' insider ownership here as part of the company and helping to, provide that skin in the game approach here. Good information there for the audience to consider. Insider ownership, management team, skin in the game, that range I think is important, but the audience to take note of as well. Just on staff, you talked about some of the key shareholders and their involvement. Some of the key staff there, anybody there that you want to mention at the company and what they bring to the table?
Yeah, absolutely. Look, I think we all know in business, staff are your main asset. You can talk all you want about commodity price, where you are, location, all those good fun things. But if you don't have the right staff and the right mix, you are not going to be successful. In relation to staff, so John and I are the two full-time executives. We're the guys that run the business every day. We've got an excellent team. We've got some people that have been with us for quite a while. I'd like to talk about Nicholas Snow. Nicholas is our Chief Exploration Geologist. He runs all the exploration programs and teams with us. Nicholas has been with us for over 4 years now. He's a key employee, and he's the guy that runs the drill rig and prepared to work pretty hard in either hot, dusty, dirty conditions or cold, wet conditions. So Nick's a key focus for us. Catherine Yeo, our company secretary and finance person, has been with us for a bit over 3 years. Catherine, again, is important to us. Catherine's a lot younger than me. Catherine's just turned 30. She's going to be the face of Auric as one of the key drivers and developers of Auric over the foreseeable time. We've recently engaged 2 mine geologists, Matthew and Adrian. Both those guys come with a wealth of experience. Both of them started full-time on the 1st of February, so they've been with the company now for a bit over 2 months. Both of them have got double degrees, geology and geostats in Matthew's case, and geology and IT and database management in Adrian's case. So they're the 2 guys that are running the Munda mine. All our workforce out at Munda work on a 2-week on, 1-week off cycle. So those 2 guys overlap for a week, and then they're there by themselves for a week, and they're the 2 mine geologists. We've brought on a guy, Mark Lewis, and his wife, Tracy Lewis, as the 2 senior site executives. Well, Mark is the senior site executive. They're a husband and wife team, and they've put together their team to mine Munda. There's going to be a team of about 8 people on site at any one time. So they've got lots of experience. Mark's worked in the mining contracting sector for 30 plus years, as has Tracy. Tracy was born in Norseman. Her father is a mining engineer. A lot of your readers would have heard of Kaora Gold that was listed on the ASX that had all their, the Canadian exchange that had all their operations around Higginsville, Norseman. Graham Sloan is Tracy's father. So she grew up really operating in gold activities. The rest of the team that Mark and Tracy have put together are people with lots of experience that are all good operators. You know, you need the right people to drive the excavators, you need the right people to drive the trucks, and you need, because it's a fairly small team, as I said, 8 to 10 people, you need respect amongst that team. So we've allowed Mark and Tracy to determine the entire mining team, and we're looking forward to that being a great success.
It's a good stuff there. The complexities of being an operator, of course, you pointed that out, and the importance of people and the importance of expertise, and of course the operators on the ground. One of the other things here I wanted to talk about was the overall, and you started into it here. You know, you guys are transitioning from production at Jeffrey's Find, of course, and then you guys are working now on the ground already at Munda. Just talk a little bit about that. We'll move on to some other projects in a moment, but talk a little bit about Munda in terms of operations update there, and then where you would find production coming in at the end of the year here. Just remind the audience of what you expect to produce at this project for this year, and maybe if you want to speculate a little bit more forward into 2026.
Yeah, thanks, Andrew. So Munda, as I said, we're doing it on a conservative basis, and we're doing a starter pit to understand the geology. So in round dollar terms, Munda this year, 125,000 tonnes going through the mill, 1.7 to 1.8 grams per tonne is our budget recovery. To produce 6,000 ounces of gold in round terms, 6,000 ounces of gold, 5,000 Aussie gold price, 30 million revenue, costs around 18 to 20 million. So we should make a profit out of Munda this year of somewhere between 12 and 14 million is the range, with the sweet spot of being 12. Our budget says that we should make 12 million bucks out of Munda. Of course, if the gold price kicks, then that's going to kick, strongly on your production. From a company perspective, yes, Munda is our flagship asset. Munda, again, if I take your listeners back to the study that we did in December 2024, it's got a resource of around 145,000 ounces. That's the resource that we believe is mineable at Munda. So if we take out 6,000 ounces in the next 6 months, that still leaves quite a substantial resource behind. We see us going back into Munda and mining that maybe starting in Q2 next year, around the 1st of April 2026. If everything goes perfectly and everything goes in accordance with our plan, we would then mine Munda for a 3 to 4 year period. The biggest issue for us to achieve that is getting access to a gold mill. Now, with the gold price where it is, Andrew and your listeners, of course, a lot of low-grade stockpiles that people have had sitting around that previously were uneconomic are now economic. For example, we have heard that Northern Star is now pushing dirt through their mill at 0.8 grams per tonne recovery. With the gold price where it is, everybody's trying to crank up their mills. So if anybody has their own dirt, if any company that owns a mill has their own mining fleet, mining capacity and their own dirt, they are not going to want a toll treat. So if I then go on to the next stage in our development, the next stage in where Auric wants to get to is why we are looking at the Burbanks facility. Burbanks as a mill at this point in time is unoperational. It is old, it is tired. It really, you cannot look at it from a mill perspective. We're not going to turn that mill on tomorrow, no chance. But what we are buying is the opportunity and the regulatory licenses at Burbanks. So Burbanks is about 15 kilometres southwest of Coolgardie, nice and close to town for your workforce. It has bitumen to your front door. It's got 3-phase power coming off the national electricity grid. It's got water licenses. It's got permits. It has granted mining leases. It is a site. So what we are doing is we are paying, and we have not settled on Burbanks yet. We expect to settle on Burbanks in July, August this year. We are buying that facility for 4.4 million Australian. So we have allocated in our minds a lot of that money just being for the power, the water, the licenses, the permits and the infrastructure. So if we started off on a clean slate, clean piece of paper, without that infrastructure already there, we believe that we are shortening the build cycle by 3 to 5 years. So as it's a fully permitted mill site, a lot of that work is already done. Getting the power there, already done. Having the water to run your mills, already done. There is a tails storage facility there. There's some problems with it. So therefore we are not really expecting to use the current tails storage facility. We believe that we will need to build something else. So our plan for Burbanks is to settle on the project, to complete, as I said to your listeners, in July/August, pay the $4.4 million, and then you own a site, you own the concept. And then throughout the remainder of 2025 and early 2026, you are then going to start to look at engineering designs, costings, development, timelines, all that infrastructure work that you need to do to construct your own mill. So that is at least 18 to 24 months down the road, okay? So as I said to you and your listeners earlier, Auric's biggest impediment to growth is going to be a mill facility, a mill capacity. So that is why we bought Burbanks, and that is why we are taking that opportunity. To build a mill, you're going to need more ounces. There is no way in the world you are going to go into that capex construction with the current resources that Auric owns. So in addition to that work that we will need to do on mill and design and getting that piece right, we need to step really hard on the accelerator and develop our ounces. So our exploration activity commencing on or about the 1st of July is going to be very quick.
So I want to talk about Burbank just a little bit more, and then we're going to jump into exploration here a little bit later, and then also talk about the Lindsay's project as well. First on Burbank, so the refurbishment timeline, you guys are going to do some reviews. I'm assuming there's going to be at some point a plan for the refurbishment. Talk just a little bit about existing capacity. I know you guys are going to refurbish this, but talk a little bit about existing capacity just so we have a flavor for capacity. And then also, I'm assuming as part of the refurbishment process, you guys will need to maybe amend permits, or maybe that doesn't need to happen. Just talk about that overall total timeline, if it is indeed that 18 to 24 months complete, or if you see this going further all the way to a point where it could be operational again. And then also just talk a little bit about that capacity.
At this point in time, the capacity of the mill is around 180,000 tonnes per annum, so it's small. The mill has really been dormant for about 8 to 10 years. The last major users of the mill were Ramelius. Ramelius, again an ASX listed company, its code is RMS. They use this mill to process the Wattle Dam deposit. The Wattle Dam deposit's most about 60 to 80 k's south of the mill. The Wattle Dam deposit, Andrew, is everybody's glory. If you could find a Wattle Dam deposit in this market, your market cap would fly. So Wattle Dam produced 286,000 ounces of gold at an average recovery of 10.6 grams per tonne. Wow, what a beast. You would be literally going to your ATM machine and taking cash out of that ATM machine every day with a project that was generating that recovery. So our view is that the mill is worn out. We don't look at it so much as a refurbishment. We're looking at it more as a total rebuild. Okay, so that's going to involve engineering designs. There's a lot of work. Okay, we're not afraid of work. Auric as a business and Auric as a team is not afraid of putting your shoulder to the wheel and going hard and working hard. We'd like to emphasise that we've done that in the 4 years that we've been listed on the ASX. That piece doesn't concern us. What we have to do is, as I said, it's a twofold process. To build your own mill, you need to justify the capex, so you've got to build your ounces. But you've got to start the process of getting a piece of land, a piece of dirt, and infrastructure before you can even start to plan the construction. So that's what we're doing with Burbanks, and we are looking at it purely as a position where we can build a mill that we can purpose fit to some of our projects.
So as you outlined earlier, some of that concern with, everybody processing, the gold price is high, mills or capacities are getting filled out. Why you guys work towards that self-determination, self-direction in terms of your own processing facility, which is a fantastic way to go, and obviously will be much beneficial as you guys continue to progress on Burbank. Any concerns about your existing relationships in the region as far as being able to toll process? Any concerns there, Mark? Do you guys see that things are heating up in the region, or do you believe that your relationships are going to make sure that you guys have that ability to process the lots as you have been doing in the past?
That, Andrew, is the $1 million question. We've got great relationships. So in our area, at this point in time, there are 4 mills that do toll treatment in some manner, shape or form. Okay, there's the Greenfields mill at Coolgardie that's privately owned. They're doing some work for Evolution and others at this point in time, and we have used that mill a lot for Jeffrey's Find. There's a mill right next door, Focus Mill. The Focus Mill is controlled by an ASX listed company, Focus Minerals. Their ticker is FML. They are processing the remaining 60,000 tonnes of ore from Jeffrey's Find, and we have an agreement with them to start late June, early July. The third mill that is in the area is the Lakewood Mill at Kalgoorlie. Lakewood used to be owned by Kaora. Kaora was taken over by Westgold. That transaction completed sometime last year. Westgold has made the decision that they want to focus on their big mill at Higginsville, and they didn't want to operate 2 mills in the region. So they sold the Lakewood mill to Black Cat 8. Their ASX code is BC8. They settled on that on the 31st of March. Black Cat, we're very close to the board and management at Black Cat. We have another meeting with Black Cat later on today to talk to them about capacity. They know that at this point in time, Black Cat does not have enough ore from their East Kalgoorlie operations. They won't most reach maximum throughput there till early mid-2026. So they have some capacity to process our ore in 2025. The fourth mill in the area is a big mill. It's the Paddington Mill, and the Paddington Mill is north of Kalgoorlie, about 30 to 40 k's north of Kalgoorlie, but they do it on a different way. I mentioned to you earlier in this podcast that if you toll mill, they basically clean out the mill, they get to a starting point. Yes, there's a thing called operating stock, gold in circuit, gold that's rolling around in the mill. You do a valuation of that gold at the start, then your dirt goes through it, and only your dirt, only your ore goes through that mill for that contract period, whether it be 4, 5, 6, 7, 8 weeks, and then you process your gold out, and then you do the closing stock. So you do the closing stock gold in circuit at the end, and then you reconcile the gold that was in the mill when you started it and the gold in the mill at the end, and there's either a payment to Auric or a payment to the mill, depending upon whether the gold in circuit is a positive or a negative. Paddington do a totally different operation. They do an ore purchase agreement. So Paddington comes, in the case of Munda, they will come down to Munda and they will look at the ore that we have on our ROM pad at Munda. They'll put a little excavator on the top of that ROM pad. They'll drill it all out. They'll then take that data and put it through a mill, put it through a laboratory. They'll say, well, we think that there are X number of tons there, and we think the recovery is X, and they will pay you half of the value of that gold at that time. Then they take that dirt and they blend it with everybody else's dirt. So they actually would blend Auric Munda dirt with other small cap producers, Horizon, HRZ, Brightstar, BTR, I think is their code, Lefroy Exploration, other small to medium players in the Kalgoorlie-Coolgardie region. They would blend all our dirt together and throw it through the mill. So at the end of the day, the key difference is you never know your recoveries of your dirt because it's a blended material. So our desire is to understand our own ore, understand our own metallurgy, understand our own recovery. So we would be looking at Munda going through either the Greenfields mill, the Focus mill, or the Lakewood mill as a lender of last resort, or usage of last position would be the Paddington mill. As I said earlier, Andrew, with the current gold price, a lot of projects are being dusted off. A lot of dirt that's been stockpiled from the 50s, 60s and 70s has been looked at. So if, the guys that own the Greenfields mill, they have their own operating facilities, they have their own operating mines. If they find the recovery is good enough on their operating dirt to punch it through the mill, they're not going to want to toll treat and just get a hourly rate. They're going to want to toll treat. They're going to want to mill their own resources so that they get the benefit in the upside of the gold price. So that's a big risk for us, Andrew. That's the biggest impediment that we have to manage and control, which is exactly why we're looking at Burbanks. So as you pointed out earlier, Andrew, you've got to control your own destiny. You've got to be in control of your mining operations, your trucking operations, your milling operations, And you've got to be able to control that all through that production cycle. And until you have your own mill, you are unable to do that.
Fully agreed, Mark. Thank you for running through that. And the optionality is there. You're going to need to balance those relationships. I think you guys, given your contacts and connections in the region there, you guys will be able to find a way to keep things moving as you have already demonstrated here in the past with production. Very much agreed. Self-determination here is going to be very important moving forward. Okay, so we've got a good idea on where Burbanks stands. I want to move on here to, we've got Munda sorted out here, the Lindsay's project. Talk about the status here, as well as what you can say on expectation on gold resources for the project, as well as what you guys are thinking preliminary as to the mining plan.
We love Lindsay's. We really rate it. The more work we do on it, the happier we are with our acquisition. So at this point in time, we have Lindsay's under contract. There's some tenure problems with Lindsay's. There are people in West Australia, if you believe, even though you're the current owner, if you believe you are not in compliance with the Mining Act and the mining regulations, you can issue what's called a plaint against that tenement. And then you go to what's called the Warden's Court, one of the courts in West Australia, to argue whether the incumbent should keep that mining tenement and mining tenure, or you, the plaintiff, should be granted that tenure. So Lindsay's is a combination of 8 or 9 tenements, and 2 of the tenements are under plaint. So we will not settle on Lindsay's until those plaints are resolved. The next hearing in the Warden's Court is on the 20th of June. So not far away, 5-6 weeks. We are working on the basis that the incumbent is successful in their argument in the Warden's Court and therefore they keep the tenements. We will then proceed as quickly as we can to settle on that. So let's say the Warden's Court, and assuming he issues a decision on the day, hearings on the 10th of June, assume he gets his decision out by the 30th of June, we will settle on Lindsay's by the 31st of July. So in our mind, we're looking at settling on Lindsay's late July, early August. What we've seen in our due diligence at Lindsay's really excites us. It is proving far better than we expected. There is some fantastic short-term mining opportunities, and then there is enormous potential to grow the resource. At this point in time, internally, we're looking at a resource of around 150,000 ounces of gold at Lindsay's. We believe that we will be able to increase that resource soon, quickly, through exploration as well as development drilling. So our plan is, if everything works, Andrew, and you are in utopia and everything goes perfectly, our plan is to mine Munda 1st of May through to the end of November. Then move the mining team to Lindsay's, mine Lindsay's. There's some good economic mining ready to go. So mine Lindsay's 1st December through to 30th of April. Then I mentioned earlier, we would then like to go back to Munda and start mining Munda 1st April 2026. That's our internal plan. That's the Gantt sheet of where we believe our mining activities will go. However, if the gold price keeps on raging along and the gold price keeps on increasing, the opportunity may be to mine both Munda and Lindsay's concurrently. We believe that there is enough material at Lindsay's from what we have seen to date to achieve that. But let's not get too far ahead of ourselves. Let's just work on that plan where it's Munda 6 months, Lindsay's for 6 months, and Munda for the next 3 to 4 years from a mine capacity. So you've asked me, and we've sort of spoken a little bit about the exploration capacity. We see exploration upside at both Munda and Lindsay's from a mine expansion point of view. We believe both those projects are capable of increasing the current resources on hand at both Munda and Lindsay's. So if we add them together now, Andrew, you get to around 300,000 ounces of gold, okay? But with development drilling, we believe that we can increase that number. So then we go and talk about what we haven't spoken about at all to date is our exploration focus. Our exploration focus is 2 projects at this point in time. The Loaded Dog project that I mentioned that we settled on 5 of the tenements in last month, April. There's another 3 tenements that we expect to settle on, and we expect to settle on them quickly. So those 8 tenements are all around Higginsville, Widgie, Malta. They've got some short results, quite shallow, between 25 and 30 metres. They've got some good numbers, 4 metres at 8 grams, 3 metres at 9 grams, all nice and shallow. So we need to get into Loaded Dog quickly and do exploration drilling. Our other focus is up at Spargoville. We've done two drilling programs at Spargoville. If your listeners want to have a look at the last ASX announcement on Spargoville, which was in September last year, we need to go back and do further work at Spargoville because we believe that is the second upside area for our exploration growth. Spargoville is only about 3 to 5 kilometres north of the Wattle Dam deposit. We believe that it's in similar geology, and just north of our tenement is the Spargo's Reward tenement, which is most probably about 1 to 1.5 k's north of us, which is being now mined by Westgold. So we believe in that 6 kilometre belt. You've got Wattle Dam to the south and Spargo's Rewards to the north. We hold a lot of expectation for what we believe we can achieve at Spargoville.
On the exploration targets there, so Loaded Dog and Spargoville, aside from that, I want to point out yet again, you guys do have immediate work as well to expand operations there as at Munda, as well as Lindsay's project as it gets going as well. So you have that at mine expansion potential, but then you also have these exploration targets. Just talk a little bit more about some of those exploration targets specifically and when you guys would expect, assuming the capital allocation is there this year or into early 26, when would you guys start to drill test those targets?
Okay, so our first target is going to be on the Loaded Dog tenements, and there's 2 targets, one called Amorphous and one called Foots Find. To answer the second question first, our exploration budget for the next 12 months is 1.7 million. We've got the cash to do that, and we have the budget to do that, and we got the team to do that. Nicholas Snow is our exploration geologist, and he's the man that runs all our exploration activities. We are looking at getting into the Foots Find and Amorphous in July this year. There'll be 2 or 3 programs that we will do there. Majority of it will be RC. We've just finished the soils program there, and we're collating that data at the moment. And then we will move from Amorphous and Foots Find up to Spargoville. And we've got 2 targets at Spargoville, one called Fugitive and the other one called Anomaly B. And we would be looking at getting in there in September, October this year. With the current gold price where it is, it's our view that you've got to go hard. I use the phrase all the time internally, we've got to push hard on the accelerator. You've got to do everything that you can as quickly as you can without being stupid. So we need to get into our exploration focus on Amorphous, Foots Find, Fugitive, Anomaly B. They're our 4 key targets for the next 6 to 8 months. Okay?
That's very good. And I like to use the term, I think it's similar, and I like yours, make hay while the sun is shining. You guys have a lot of things going here, but as you said, it makes sense to step down on the accelerator when market gives you these good prices here to take advantage and maximize cash flows and obviously value for shareholders. Okay, so Mark, we've talked a little bit about the exploration work and some of your guys' plans there. Any other projects to add? Anything to add on Chalice West? Anything else there?
We see Chalice West as a bit more greenfields opportunity. So whilst it's a good project, and we've spent a fair bit of money on it, we've spent about $1.5 million on Chalice already. It's more a longer term vision. We want to build our ounces, Andrew, and we want to build them as quickly as we can. And we see that through the drill bit. So the only way you're going to increase your ounces under your control is either A, through the drill bit, or B, through M&A activity. In our area, there are some M&A opportunities in the small to medium cap space. Forget the big boys, forget the Northern Stars and the West Golds and the Goldfields and people like those great big behemoths, Pantoro even. Forget those guys because they're going to play in a different market and a different area than what we are. You've just seen in our neck of the woods, Austral just complete the merger or the takeover of Maximus Resources. And as a consequence of that, they were able to put out a new resource announcement yesterday, I think it was, where they've increased their resources up to about 1.75 million ounces under their control. So for Auric, our key focus has to be on Munda, Lindsay's, Amorphous, Foots Find, Fugitive, and Anomaly B. They're the 6 key things that we talk about internally all the time as must-dos.
That seems to be a good mix because you have cash flows coming in or helping to fund this, keeps the dilution down. A great little mix here, Mark. So I appreciate you going through that. Um, Overall strategy, Mark, you guys are cash flowing. You're intending to deploy a lot of that cash back towards growth, those initiatives to grow the company value. What do you see as really the long-term goal here? Continue to increase production profile, continue to size up, continue to be an operator, or do you guys see at some point you'll start to return maybe capital to shareholders in maybe a form of a dividend? What do you see as kind of the bigger picture for the company?
Look, it's a twofold question. From today for the next 3, maybe 4 years, we see ourselves as a growth opportunity. Our focus must be upon growing the company. It must be increasing our ounces, increasing our profile, increasing our market cap, building resources, building infrastructure, getting to the stage where Auric can control its own destiny, right? That's our profile work for the next 3 to 4. After that, we would certainly be looking at being a dividend payer. Look, we're making enough profits at this point in time, and we're making enough cash flow at this point in time that Auric could easily pay a dividend. However, we see that as a bit of a short-term issue. Like we see better value for the money internally. And it would be my pitch to you and your listeners that we are a growth stock and we are a growth opportunity for the next 3 to 4 years. If you're looking at a dividend yield, a dividend return, Auric's most probably not where you should go for the next 3 to 4 years. But we need to substantially, and I mean substantially, increase the market capitalisation of this company and therefore the underlying share price. So our goal and our focus, Andrew, is purely on capital growth and development at this stage.
Mark, and I think that makes sense. Definitely where I would point as well. So I appreciate you covering that off. Okay, so just on other matters here, I want to get into a little bit of administrative. Any comments on the community work at the various project areas? Anything you want to add there? Now's a good opportunity. We like to ask our guests about community work if there's anything on that front that needs to be covered, as well as anything on the regulatory and permitting side of things at each of the projects.
Okay, so again, that's a bit of a twofold question, Andrew. So talking about the community work first, and it was announced on the ASX in late December last year, we have entered into most probably one of the first agreements in Western Australia on an area-wide basis with the traditional owners, the Naju people. And we've now entered into an agreement with the Naju people on all their tenure and all our land within their area on an area-wide basis. So that's a fantastic result for both the Naju people and for Auric. It gives certainty for Auric on our mine plans and our development and our work and ability to carry out activities and mining operations on Naju country. And it gives the Naju people clarity upon what they are going to get financially from our activities. So there's at Jeffreys Find and Munda, they're both on granted mining leases. So they're on pre-native title granted mining leases. So there was no obligation for us to pay any money at all to the Naju people for our mining activities at Jeffreys Find. We didn't think that was in the spirit of cooperation. We didn't believe that that was in the interests of both parties for a longer term view. So we entered into an agreement with the Naju people that we would give them a fixed price sum up to the first 30,000 ounces of gold that we take out of Jeffreys Find. And then in addition to that, we have agreed to pay them a royalty of, I think it's 1.5% for any gold that comes out of Jeffreys Find over 30,000 ounces. We've also entered into an agreement with the Naju people to provide them first choice of work and contracting. So a lot of the traditional owners, either part or fully owned, partially owned, trucking operations, mining operations, and we have offered to engage with them under first rights principle. Certainly any work that we need on rehabilitation work, revegetation work, replanting, again, we would offer, our agreement specifies that we would offer those people the first rights to do that work. So we meet with them fairly regularly, both in Perth and at their office in Norseman. Whenever I'm in Norseman, I make sure that I go in and meet with the people that run their operations. And in addition, you do these heritage clearance operations before you can do drill programs. And we've built a good rapport and arrangement with those people because we've mostly now done, 10 to 15 day heritage surveys across Naju country over the last couple of years. The other traditional owner group that is in our area are the Malinya people. We haven't had so much interaction with them at this point in time because we haven't had a lot of activities in their area, and also their claim has yet to be determined in the federal court. So at this point in time, the Malinya people do not have the tenure and the native title grant that the Naju people have. So we've started our conversations with the Malinya people, but they're nowhere near as advanced as they are with the Naju people. Up at Lindsay's, there's a totally different traditional owners up there, so we will need to start that conversation and open those doors soon. In mining tenure, we're very lucky at Auric, is that we have at this point in time 6 or 7 granted mining leases. That means that if we find a resource, we can go mining on it quickly. For example, both Jeffreys Find and Munda, when we bought those projects of Mincor and Estrella, we knew that they were on granted mining leases, and we knew therefore that we could mine them quickly. If they weren't on granted mining leases and they were still on exploration licenses, you have to go through that process to get them moved from an exploration license to a mining lease. And at this point in time, you would expect 3 to 5 years timeline to get them granted from an exploration license to a mining lease. For example, I'm sure lots of people on your podcast have heard of De Grey and the Hemi deposit up at De Grey that Westgold has just taken over. De Grey had spent 3 to 5 years getting that deposit converted from an exploration license to a mining lease. And I'm not sure if it's just been granted or is expected to be granted. So De Grey, whilst it was an amazing deposit, has never been able to mine it because they weren't on granted mining leases. So that's a very important point that I need to emphasize for this podcast, that Auric has all the rights to go mining on the tenements at Munda, at Jeffreys Find, and at Lindsay's. And that's really important in this fantastic gold price environment to keep hammering the point that we need to get in and get it done.
Mark, thank you for going through that. I think that's great stuff there. Definitely gives us a flavor of kind of how you guys are treating community. That I think goes a long way with what you guys have done there. And then, of course, some of the regulatory and some of the timeframes that we would have on permitting, and whether it be exploration activities or, of course, mining operations. So appreciate the flavor on that and how that looks. Other part of this on the administrative side, any plans for the company to add a US OTC listing in the near term, or do you think the ASX listing is suitable at this stage for the company?
Well, Andrew, I'll be honest, that's a question I've never even put my mind to. I don't know that much about the OTC market. I know that quite a few ASX companies do progress onto the OTC market or up into Canada. At this point in time, Andrew, we've got enough things on our plate without really looking at that. Most people can trade either through HSBC or through interactive brokers. We have quite a few shareholders on our register through both HSBC and IB accounts. So at this point in time, Andrew, it's a long way down our thought process. Maybe you need to jig me along and get it a bit closer to the forefront of my mind, but the answer for the next 12 to 18 months would be no.
Perfect. No, Mark, I appreciate you going through that and giving us your straight opinion on it. I do think there would be some benefits for sure. I would always encourage folks looking to grow that North American audience to look at the US OTC listing as the first step in any type of listing. I sadly would discourage you from not going on any Canadian exchange at this point, given you guys are in Australia, you guys are doing fine there. But
Yeah.
certainly a US OTC is probably one of the easiest, simplest listings to get. A QB or a QX listing is fairly straightforward. Probably start with a QB, but certainly there were some advantages to getting to some of segments of the US investor market. You're absolutely correct. Having a brokerage account like Interactive Brokers or HSBC, some of the full service brokers, obviously in Canada, and some of the better brokers in the U.S. can certainly get access directly to the ASX. But still, it's funny, you can still get quite a few brokers in the U.S. that do not have access to the ASX and that they're more US centric. So that's certainly a consideration. But I think you're on the right track there, and probably not an immediate concern, but maybe something to look at in the future. Well, Mark, short of any other comments you'd like to add here, I think we'll wrap it up for this introduction. For potential investors who are listening in, the company has a market capitalization roughly of about 40 million Australian dollars. Why should Auric Mining be considered within the institutional, family office, and retail investors portfolio at this stage?
I think there's a few reasons. One is we believe we're very cheap at this point in time. Two, we have a clear path to production, both at Jeffreys Find and at Munda. Three, we have our growth strategy lined out and we know where we're going. You'll not see Auric move from a gold focus, and you'll not see Auric move from a focus around Kalgoorlie, Coolgardie, Higginsville, Widgemalta. Okay, so one of the key focuses for Auric is we want to stay in that region. And the reason we want to stay there is there's a couple of reasons, but basically is that you are not wasting money on transport, on airfares, on logistics. You need to maximize your spend in the ground. We believe we're in a fantastic location. Everything that you need or want to run a mining company like Auric is 100% available in Kalgoorlie. Kalgoorlie is a big town and it's a mining town. It's really got nothing else other than mining. So our Munda project is 100k south of Kalgoorlie. We have a problem, flat tire or something major. You can get that part out of Kalgoorlie and most Australia have it there within 2 hours. There are some other great mining activities, mining centres within West Australia, but that location, that ability to be so close to town is fantastic. Lindsay's is even closer. Lindsay's is only 60 kilometres out of Kalgoorlie. So we've used Kalgoorlie and Coolgardie as our hub, and we, Andrew, as a company philosophy, want to stay within 100, 120 k's radius of those two hubs. That's a key focus of ours. I think there's still enormous growth, both through buying small projects like the Loaded Dog project, like the Lindsay's project, to build the resources of Auric quickly. And then, we got to build the resources, as we've spoken about, Munda, Jeffreys, Lindsay's, Footsvine, Sparkerville, I suppose my biggest pitch to your investors would be, A, we're focused, B, we're in a superb location, C, the commodity that we are in is going to be a great commodity for the next 1 to 5 years. I don't see the gold price going south in that period. We're well managed, tight capital structure. The directors have got enough skin in the game. I think we tick a lot of the boxes that people want to see when they make a investment decision.
Mark, for investors seeking further information, how can they reach out to the company?
Oh, they can jump on our website, auricmining.com.au. We've got an investor hub there. They can ask questions. We'll answer their questions. All our emails are on there. My email is menglish@auricmining.com.au. I'm happy to take any questions. Anybody wants to email me directly, please do so, and I'll reply. We have a internal rule is that we try and reply to all emails within 24 hours. So, we have some shareholders in North America. We have, they're actually in our top 10. They were living in Australia. They're now living in New York. They're computer people that reside in New York. I communicate with her on a fairly regular basis. And with the time difference, she can email me early evening her time. I'll pick it up early Aussie time, and I respond to her throughout the day. So I'm very happy to take any questions, and respond as best I can without getting myself in trouble with the ASX listing rules.
Excellent. I like how you put that, Mark. Well, thank you very much for the introduction to Auric Mining. Keep up the good work there, Mark, and of course the production and development activities. And we look forward to having you back to update.
Yeah, thanks, Andrew. Been a pleasure.